the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Monday night, we're lucky to have Charles Tarbey, Chairman of Century 21 Australasia, online with us. Nice to talk to you again.
Thank you, Steve. You too.
Real estate markets hate scares and negative talk. We are in the middle of probably the biggest talking down of the real estate market that I can remember in the last 20 years.
Yeah, you're absolutely right. There's so many things working against the market, whether it's I hate to say it, hasten to say it, but the media has got a voice out there. But the media has been driven also by a number of people that have varying degrees of views on it. I mean, you're hearing people talking about, a drop of 8 to 10%, then you're hearing people talking about a drop of 30%, then 50%. It's pretty hard for the media to follow what is really going on out in the marketplace.
I guess we've got the perfect storm, haven't we? We talked about this before, where we've had an incredible run of, particularly in Sydney, Melbourne and Brisbane, of real estate just continuing to increase in value, and people have seen wonderful capital growth over those years, whether it's in their principal residence or whether it's in an investment property or whatever that might be. That was always going to stop at some point, but it stopped at the very same time that we had a Royal Commission into the banks, and that we have the prospect of a federal Labor government that wants to fiddle with things like capital gains tax and negative gearing.
Look, there has to be a connection between those two things, the Royal Commission and the federal elections. There's no doubt that people are frightened. I'm glad you made the point that people have made a lot of money out of real estate over a period of time, because that's something that's not spoken about as much. You see, a lot of people will say to me, hey, do you think it's going to drop, as though we can see into the future. And the reality is, if you just look at basics, the basics are that unemployment's very low. Interest rates are very low. And if you put those two together, if people don't have to sell, Steve, you know what, they're not going to. So I think you'll find that most people will just sit tight if they don't have to sell. And there's not going to be the great bargains out there in most of the marketplace. We still think that in the apartment area, in certain areas, there's going to be some great bargains. But those bargains come with the fact that capital growth may not be in those areas for some time as well. So I think we're in a reasonably stable market, expected market, excepting for the fact that talk about elections and the Royal Commission have made a different dent on the marketplace as it was.
Yeah, look, people are finding it difficult to get the banks to lend them the money that they need. Yeah. I mean, I was on the fringe of a real estate transaction last weekend, and there was a person who desperately wanted to buy this property because it was going to suit their lifestyle. It was near where they want to send their children to school, but they offered the maximum that the bank would let them have. And there was those days of the bank going, okay, whatever you want, yeah, no problem, we'll lend it to you. They're gone. People are not being able to borrow as much money as they need.
Yeah, there are two things, Steve. There's the banks, and as you know, the banks have said they haven't changed their lending policies.
Well, they have.
Those people are out there are really feeling it. But then there's the second level of that, and that's once you do get a transaction or a loan approved and you move on, you've still got the valuation process to go through. And that too is challenging right now, because there are price movements downwards in certain areas, and valuers, rightly so, are getting a little nervous because they got bashed a few years ago for no reason at all. So you've still got a double whammy there. Even if the banks do give you the money, it's still subject to valuation.
And the banks are being very tough on what they're valuing property at. I know that for a fact.
Well, yeah, we worked that out recent times and certainly in the near future with apartment sales, because the valuations are just not coming in at what the contract price was, and people are struggling. It's interesting, though, that the clearance rates in Sydney were higher than this time last year, 62.2% compared to 61.1%, albeit that there were one-third or just over one-third as number of auctions. But still, that's a really quite a significant clearance rate. So there's still energy in the market. I talk to the agents, obviously, on a regular basis, and a lot of them are saying, people out there, open homes, a lot of people coming to open homes. The listings are up on this time last year by 8.92%, so there's plenty of stock. So there's a lot of opportunity for people out there to buy property right now, but they've got to get through that process of banks and valuations.
Melbourne clearance rate's still poor, 57% this time last year, 65.8. That's a really stark comparison between Melbourne and Sydney.
Oh, it's massive, but, we had it was Grand Prix, wasn't it? Weren't you running around the track then? Didn't I see you in one
No,
of
not
cars?
this weekend before.
Right. I think the auction clearance rates were low, but the numbers were low too. They had 2,071 auctions this time last year, but only 658. And I think the Grand Prix, whichever way we like it, does put a dent in that process. But auction clearance rates still, when you look at Melbourne, still at that sort of rate, that's not too bad. Not as good as last year, but it's not too bad at all.
Brisbane 34.2 this time last year, 45.5, and Canberra 52.8 this time last year, 69%.
Canberra and Adelaide did pretty well in the clearance rates. So if you think about it, and you think about the conversations that have been going on in the last 2 or 3 months, you would have expected clearance rates to be 30 or 40% with all the negative talk we've had. So I think the auction clearance rates are giving us an indication that people are still interested, a little bit more cautious, taking a bit more time. But again, with the election, with the banks, with the Royal Commission, there are still some hurdles that people have to.
Yeah, but I did still see. I still did see at the weekend several sales in excess of $3.5–4 million.
Yeah, I know. Again, this is what I'm saying. Everybody's been talking doom and gloom, except for the people who are out there looking, because they're probably thinking to themselves, I've got this whole field of myself right now.
That's right. If you sell into a deflated market, you're buying in the deflated market as well.
Exactly. And so, some of the talk from the politicians, I love the talk from the politicians, because some of the politicians have very little or no property portfolios at all. And I'm really fascinated at how they're coming out and talking, particularly some of the Labor politicians talking about negative gearing, and their property portfolios are limited in some cases to one property, and if they're really out there, a holiday home. I mean, these are people that are telling us what the market's going to be like or what we should be doing, when they really are not investors themselves and they really don't understand the concept.
Exactly right. Good on you, mate. I'll talk to you next week. Thanks, Charles.
Thank you, Steve.
Charles Tarby there. He joins us every Monday night. He's the chairman of Century 21 Australasia. Knows more about property than anyone else.